Hello, hello. Hi, everybody. This is our live stream. Today's going to be a very exciting one. As you all know, this is round two of our investments tracker slash financial literacy crash course. I guess you can call it that. And I'm so excited because this is part of our new kind of initiative to bring on our community members who have a lot of domain expertise, who have a lot of experience in researching various topics, and bring them on so that they can share their knowledge and tell the world, right, along with us, and especially to our community, giving us more insights, more benefits, more unique perspectives on how to build the actionable tools, the actionable systems to help us put our learning into action. Today, we have our guest from last week's first Build With Me for the investment tracker, Travis Washington. He is a wonderful, wonderful source of light and inspiration in the community, and he has done a lot of work in researching financial literacy for himself, right, but also for his family and community as well. He's a music teacher from the Bronx, and I guess I'll give Travis a quick hello. Say hello to the crowd.
Hey everybody, what's going on?
Awesome. And yeah,
Congrats, Conrad.
yeah. Do you have anything you want to say? You want to add on to our lovely audience today?
I'm just happy to be here. I've done a lot of research on financial literacy. As I said last week, I'm not an expert in this field. I've just tried to do a lot of research for myself, and so that I can make smarter investment decisions ultimately save for retirement and to eradicate my own personal debt.
Awesome. And I think that's really like the best place to start, right? All of us come up with um, s- solutions to problems we have, right? To pain points we feel. And I think there's nothing more genuine than sharing just our story. And I think the very interesting thing here, oh, I guess like a disclaimer, yeah. First of all, the information and publications are not intended to be and do not constitute financial advice, investment advice, trading advice, or any other advice or recommendation of any sort offered or endorsed by Coix3, myself, or Travis. It's really our opinion only, but it's our sharing our opinions and the ways that we think about how to handle investments, which may be valuable for you to kind of consider, but definitely as information only. I think that's very important when we're kind of talking about anything to do with investments because it is a touchy subject. There's again no real expert here, but it's just things that we understand and we know how we can share with you guys and hopefully to educate us all together and move forward a bit better together. So we're just going to do a quick recap of what we built last week. So last week we talked about financial literacy and built the base architecture behind the system. What this essentially means is if you kind of scroll down, you see we have like a little table of contents. We kind of just explained, why we wanted to build an investment tracker, especially in Notion, what we wanted to build. So had importance was we had to have like a free and easily customizable database to be able to track our investments, and then also have like a section for masters, which are basically educational materials about the best practices of types of investments, especially in different countries. We are now in over 76 countries. Can you believe that? I think that's just amazing. I'm really proud of our community, and having the opportunities to share to such a diverse audience. I think it's only right to do it justice by also having a diverse database that basically has a lot of different information. So if you want to check out the previous video after the live stream, but you guys can see we kind of explained some of the more prominent investment types and just little explanations about like, hey, what are annuities, what are low cost low fee index funds, what are ETFs, and etc. So but general tips that we're talking about today, and throughout our entire life cycle, I guess, of this investment tracker is that we need to automate our investing. Gotta take the thought out of it, use a system to standardize it, and hopefully divorce your emotions from it. I know it's not that easy. Travis, what do you think about that? Like, how are you able to
Divorcing your
divorce your
emotions.
emotions from investing?
We were joking around, Conrad, and I think we called you, Dean and I said you're a robot just because I don't know how you do this and you also work all the time, and even how you invest, you're able to do that. I think it's understanding your risk tolerance, you know?
Mm,
So, yes, definitely being able to make non emotionally based investment decisions. But I believe that the way in which we do that is understanding our complete financial picture and then asking ourselves, okay, if I invest in, this thing, what is my risk? And then how do I feel about that risk? If I don't feel good about the risk that I'm taking,
mm.
I shouldn't be investing in it.
Makes sense, right? So I guess that leads like very clearly into the next point where, find great resources and references, do your own research, right? Understanding your own risk tolerance is very important. And then you got to do your research so you understand like what's the true risk of investing in this stock versus another stock, or this instruments in terms of another instruments, right? This financial instruments. And
Absolutely.
I think one thing is that investments are really unique, right? What works for Travis, what works for me may not work for you. What works for you may never work for me. It's really based on your own kind of your own, not just even risk tolerance, but even your own preferences, your own domain knowledge, right? If you
And where
are
you're at.
very, yeah, if you're like in an industry where you're really certain and knowledgeable about insurance, then you should be investing in insurance products, right? Because you know about that. Mm. And also like mindset is really important. And for me, I like to, I guess, put the mindset into a system so that I don't have to think about it too often. It's really easy for me to say like, hey, if only it goes up 5 more%, I'll sell, and then it goes up 5 more%, and it goes up 10 more%, I'll sell, and so on and so forth. And you just end up never selling and never realizing your profits. So you need to set up hard limits to take profits and also cost average. So in my opinion, the system is really helpful for us to remind ourselves, if anything. So that's basically, some general things to keep in mind throughout this whole live stream. And of course, we talk about, how we achieve it, what's the different views we're building, what's the data input screens. We talked about the 3 databases that we're ending up building. So the 3, basic databases that are going to help us structure our whole database and make sure that everything works as intended. And also we talked about, how the different properties we built, one is that the companies or stocks that we want to watch, right? So we have tickers, we have, notes that we want to make about it. What's the tag? So this is where you kind of put all your research. And our idea actually is that if we can have like a master, companies / stocks to watch in the Coix3 community, I think that'll be really cool, right? So everyone just throws in the companies that they think, or the stocks that they think are interesting to look at, and we can all just pull from there, and we can add in information if we learn about something through the grapevine, right? Maybe Travis, buddy, you find out that Amazon is hot, right? And then you can let us all know, and then we can all just jump in and get on that boat. So there's that. And also, of course, having like your investment portfolio view as well, seeing like, hey, what have you actually bought? What's the current, unrealized gains and, unrealized losses. And also, of course, your realized gains and losses. And then also, of course, your holdings, how much money you have ready to invest. We talked also about there's 2 ways of tracking returns. One is realized and one is unrealized. We're going to talk about that soon. And now, of course, we have some apps that we were referencing to kind of mimic the look and feel and mimic the functionality most foremost, right? This is where Travis can probably talk for more later on, where he has used a lot of apps out there. And, that's kind of the motivation for us where, we don't want to use so many different apps. We want to use one app. We want to have one place to see all our investments across the board and make meaningful decisions based on what we know about how the investments are performing. And we also had a lot of good, feedback since our last live stream from people like Patrick Ambrose, from people like Julian Fung. They've been able to guide us and help us with additional resources as well. For example, making like a stock dashboard. So all these really cool things are going to be shared and shown as we go through today's live stream. But really just a shout out to those who helped us and give us more research and feedback in terms of how we can better present what we have today to share with you guys. So this is a very collaborative session. feel free to jump in the chat if you have any questions, if you want to ask anything specific. We're here for you. Travis, if you want to jump in and say, Conrad, you're saying the wrong thing, you got to say it this way instead, feel free to interrupt me as well, and I'll do the same for you. And yeah, let's have a really
Put
good
the gain
one.
up on the mic.
Sorry, say that again.
I said, like, Travis, put the gain up on the mic. They can't hear you.
Ha 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 ha. No, I think the mic sound check is all good today. So
Yeah.
I'm really excited. And yeah, let's get started. So where we left off was that we wanted to build some more views to kind of help, I guess. Well, actually, let's swing up to the top here. There's a top section here where we kind of say, okay, so we have 3 things to do today, right, in general, and then I have like a checklist. So this week we want to implement advanced features to automatically calculate returns, rules to help you make smarter investment decisions, and integrate with your success plan. Part of that is going to have to do with beautifying this page. So we're cleaning up formulas, we're adding in meaningful views. And then the really exciting part is going to come in the latter half where we connect our whole system that we built here to our budget tracker, to our finance tracker. So we can then connect to our daily habits, our daily quests, and our success plan. So our investment goals. So I think that'll be really fun. I'm really excited for that. And then at the end, if we have time, we'll talk about meaningful API integrations that we can have, where we can pull in relevant information so that we don't have to manually input numbers that we're looking at. And of course, also collaborative lookup databases that I mentioned that we can all kind of work off together and improve on at the same time. So that's that. Travis, anything that you want to add before we get into the thick of things?
I think the only thing that I really thought of was if you're looking for very, very good advice, I would suggest researching a fiduciary advisor, someone who's going to give you non-biased investment advice. Because we can give you our opinions, we can say this works for me, but what you want is someone who can realistically look at your complete picture and talk to you as an individual and say, okay, here's what I think is the best course of action.
What did you call that? A non-biased
Fiduciary advisor.
Advisor.
I can put it in. I'll put it in.
I put it at the top already. I pasted it in the top.
Real quick. All right. Gotta keep up. Here we go.
All right. Well, awesome. Give us a shout if you're in the chat. Let us know what you're currently thinking about in terms of investments, like what would you rate your kind of investment prowess from like 0 to 10? How do you kind of feel that you are financially literate? And hopefully that'll give us an idea of how we can also present to you better and share with you exactly, where we kind of think the spectrum lies and, what will be useful for you. So without further ado, let's scroll down and take a look at the database. So let's take a look, and Travis, follow me here. We're going to go into the, let's go into the investment portfolio. So we have 2 different views here. One is for data entry, one is for anxious investor. Just to recap this a little bit, for data entry is when we want to add new investments that we're making based on investments that we already have kind of stored in the stocks and companies to watch. So what happens here is, like, for example, maybe we bought individual stock of Amazon, about $4,000 of it, right? And these are dollars, so let's make sure that's dollars. And current value, right? So liquid value is 18,000 or 1.8 thousand basically. And we're saying that, hey, actually no, this is wrong. This is the original amount. Is that correct? Travis, just double checking. I think we said that was the original amount. Let's take a look.
The investment number right here.
Yeah, that's the original amount. No, that's the amount that we bought it at. Okay, so this is the amount that we bought it at. So we can say this was value per share on date of purchase. Let's make this more clear. On date of
Looking
purchase.
at current price.
Sorry. So awesome. So we have value per share on dates of purchase. So we're saying that when we bought it at the time, it was 1.8 thousand, and that was on March the 25th. and we're saying that we bought it from our savings account. We use our savings account to buy Amazon stock. I mean, it's just an example. You can use any account that you want. And essentially, we can keep adding, like, oh, maybe we bought a bond ETF, right? Maybe we bought an ETF as well. And these are all different investments purchases that we have made. You can also feel free to like append like the date that you bought it at the end of this. Like the name doesn't really matter because we have so much other identifying factors here. We know which investment it is, we know which account's for. But if we really wanted to, we can now, actually this is wrong, yeah, because this is the T row now, just to make sure that our demo data is accurate. In the second row,
we're just going to update. So on where it says value share over here, is this the, do we need to put in what it is today? Or is this the
are you on the
numbers?
data entry view? Just confirming.
Yeah, I'm in the data entry view and investment portfolio here.
No, the
So
value per share is the value that we bought the stock on because we want to track the realized gains since purchase date. So that's what we're doing here. So for you, basically what I'm mentioning is that I think the second one, it's not Vanguard, right? It's T row. I just want to say, yes.
Oh,
yeah, you can edit that if you like. And basically what I'm saying is that for like denominations, maybe you can say like this is March 25th, 2020. So it's easy for you to remember. And then same thing for the below here. This one you can say this is Jan 22nd, 2020. So basically you can easily see it at a glance. And this is like the data entry, right? And then when we switch to the anxious investor view, essentially what we can see is like, hey, how much growth have we had since the moment that we invested in? And this is where we put the current value per share, current being today. So let's say we go to the stock, we go online, we go and find out, hey, how much is Amazon worth at this minute? Maybe you can tell me, Travis.
Yes, I can. 1 month.
And while that's happening, I'm going to show you as well what
2,954 close of business today. Dollars.
2,954, right?
Mm-hmm.
954. Awesome.
And
So
80 cents,
so
to be
we
precise.
sorry.
I said and 80 cents if you want to be precise. Which
That's perfect. We need to be. So awesome. So in the example of Amazon, right? And we can even like do a meaningful like sort. We can say, hey, let's sort by the most growth, for example. So let's say that I want to see the most growth at the top. So right now, and this ETF, how much is it for? This ETF was for, let's take a look. This ETF was for an example basket. Okay, so if that's just an example, let's not raise this up so much. Let's say it's only $11 right now for the second one. Okay, or maybe like 12. So it's a bit different. Okay, so what we're seeing here is that Amazon, actually, we've held it for 5 months. And right now growth to date is 157%. And the current value of our initial investments is now $6,767. What we can actually do here as well, now that I'm noticing, is that let's reveal one more property here. Let's reveal the property for how much our investment amount was. So we can see that our original investment amount was 4,000 and now the current value is 6,000. So you can kind of even see that, and if you want to, you can even calculate here. You can sum at the bottom. You can see that this is your current investment like lockup. You're currently locking up around 7,697.80 cents worth of funds in investments. This is a really easy way for you to calculate that really quickly. And you can see that, maybe even if you want your average growth is around 129% over your whole portfolio, right? You can even say your average holds how many months are you holding on average. This one I don't think is really meaningful. Maybe like, but it's up to you. Like Notion has these really interesting capabilities where you can kind of just track those things really easily. But where I kind of wanted to show you guys was basically we can do two really cool things here. Let me show you the first one. The first one is I added something called rules, and this is something that we started building just last week, right? But basically, this is how I like to think about investing, and this is where Travis interrupt me anytime, right? But basically, you can see when I scroll up,
correct information here.
Mm-hmm.
For the stock price, and just making sure we have everything exact.
Awesome. Yeah, you can do that. Thank you for that. Basically, like if you can see up here in the Amazon under company stocks to watch, we have something called hard threshold notes. And you can rename this however you want. We can even call it just notes, or like rules to follow. Maybe rules to follow. But basically, they're just important information for you to consider that, hey, what do you want to do? When do you want to sell? When do you want to buy? For example, you can set like, hey, I'm satisfied to sell when I hit 130% return, but I want to buy whenever it's under a certain price. Usually you would say, hey, because right now the value per share is that. How much did we buy it at? Let's take a look. We bought Amazon at 1,885. So maybe we can say, hey, from now on, whenever it's under 1,500, if it ever gets back to that, I'm going to buy more, right? So basically you're explaining to yourself, and this automatically gets filtered whenever you decide that you want to make another Amazon investment. So this is kind of like a really good guide for you to say, hey, you know, these are my current holdings. This is my growth to date. This is my current value, and these are my rules. I need to remember these. And if right now I see that my growth is over 130%, I'm going to sell. I'm going to at least take back my initial profits, or at least my initial amount. Maybe I take back 4,000 and I invest 4,000 somewhere else, and I keep the profits of, you know, 2007 in the stock still, so that if it appreciates even more, then I'm gaining, right? So the basic rule of investing is always realize your gains. Like don't wait too long. Don't delay on that. Like for
Right,
you,
don't get greedy, as they say, right?
don't get greedy. Exactly. Yeah. So this is like a really interesting view that I like to use. It's very functional. And if you want something a bit more pretty, you can even do that as well. So one thing that I'm going to duplicate this view. I'm just showing you different ways that you can visualize. Obviously, it's really up to you what you want to do, what you want to show. But basically, like if you want to have a version of this that says, hey, you know, I'm an anxious investor and I actually want to see, let's say I want to see my, okay, I'll do it like this. So what we can do here is, let's go back so I can see information. Maybe you guys can tell me in the chat, what would you like to see in like a sentence format? Let's say you were talking to someone and they were just saying like, hey, you know, how do you want to explain, you know, your investment? So like, basically in like a conversational way, like, hey, your Amazon stock is now 5 months in maturity. You have 157% growth to date, and your current value is this, and then you need to sell or something like that. Basically, like you can set, like you can write a formula. I'm just showing you an example. Like you can write your own formula, but I wanted to show your example, like conversational, right? Conversational bot, let's say. And what we're doing here is we're saying like, hey, you know, hi there, you know, your investment is doing well. And then why is it doing well? Let me explain. Let's say your initial investment amount of, let's say, and then plus, and then we can do prop investment amount. So I'm teaching you a bit about formulas as well of prop investment amount. And then let's say is now currently valued at, and then again we do a plus, and then we do current value. Let's say current value here with, let's say with unrealized gains of, and then now we can do this minus this. So we can do current value of plus current value minus investment amount. And you'll see that right now it's not perfect yet because these are not text. So we need to wrap these with a format. So when you do format, this makes any numbers into text. And then let's go format right here. And then let's do this plus format. And then I'm going to wrap everything here. Boom. So let's now take a look what's happening here. So we see, hi there, your investment is doing well. So let's add an emoji here just to make it like a wave. And your initial investment amount of 4,000 is now currently valued at that. And we can clean this up in terms of like keeping it 2 decimal places later. With unrealized, okay, let's add a few spaces right here of, and then this amount. So basically you can see like you can even have like very conversational like indicators so that you can basically have it like kind of communicate with you in a sense that you don't have to necessarily look at just like a boring spreadsheet that says, hey, I'm just calculating numbers. But the beauty of like using Notion to do all this is that now I can even have like a view here that shows that conversational. So let's say I can show, so what we can do here is instead of using a gallery view, we can use a board view. So when you do a board view, we can actually have this in terms of, let's say, example conversational bot. So here, so now immediately everything gets valued. We can see immediately, hey, this is your ETF, your investment is doing well, blah, 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 blah. And you can even set like if statements to say like, hey, if your investment is not doing well, then you can have like a big X over everything and, give you different information instead. So it's just different ways of how you want to visualize your information. Again, that's the beauty of Notion, in my opinion. You can really have many different ways of visualizing. And then if you ever want to be more practical, you can see like this information again. But again, everything that you were doing in terms of showing information like this, or everything that we're showing in the table view can also be shown in the board view as well. Travis, you doing okay?
Success plan, right?
Sorry?
We can eventually like connect this to the gamification templates, the key results and the success plan as well, correct?
100%, and not eventually. We're going to do that today.
Oh, and I'm good. Yeah, I was just updating some of this stock information just to get it very precise. So the ETF that we chose for this, I just chose the Schwab S&P 500 index fund, and I just updated the price for the date that we chose. I did the same thing with the bond ETF, which is PRNYX. It's T. Rowe Price, New York City municipal bond.
Mm-hmm.
Free, I believe, actually.
Awesome. Well, thanks for that.
I'm great. I was just listening to you. I'm learning as well. So when you enter some of this stuff in and you're, creating this part of it, I just think, wow, I wasted a lot of time having to use, a budgeting app, and then also an expense tracker, and then maybe a separate app to be able to track my investments, right? And then if you don't like something in there, you have to switch to something else. So I really just appreciate how we're building something that can be tailored to the individual. If there's a view I don't want, I don't need it, I can take it out. But everything that I do need, we can literally build it. And I think there have been a couple times now that I've been in CoX3 and I've said, hey, Conrad, can we do XYZ? And it's like 2 a.m. at some point. You're like, okay, yeah, I've created it. Here it is.
Yeah, well, I mean, that's the beauty of understanding a system, right? And having a tool that's so flexible. So for us, like for example, what I just did while you were talking is I built like a new property that says unrealized gains and losses. So this is the opposite of this, right? These are realized gains and losses. You've actually cashed out or you've actually cashed in, right? It's up to you. Or yeah, you've cashed out, but usually it's like either you gain or loss. But unrealized just means like, hey, what's the difference right now, right? So if the current value is, again, so you're an active investor, you enter that the current value right now of this stock is this amount. So your current value of your entire portfolio for this investments is 6-7, right? You initially invested 4, so these are unrealized gains and losses is 2K. So basically you can even also, like I mentioned here, have like a sum. So you can say like, hey, basically then I have unrealized gains of around 3K. Do I want to cash out yet or not? And then you look at the rule to make your decision. So everything is very intentional. So if I look at it, let's say I do a step-by-step process, right? If I wanted to kind of train ourselves and teach ourselves how to use the system, I can say, as an anxious investor. And again, Travis, if you think that as an anxious investor you wouldn't do that, let me know, right? It might be different for people, but as for me, right, as an anxious investor, I am going to look up the current prices of the investments I am making from time to time. And then my role is enter the current value into the property. What property is this? The property is current value per share. Current value per share. And then observe how the following properties to help me make a reasonable decision to sell or buy more, right? So basically, what am I looking at? I'm going to look at, and let's make a checkbox, right? Maybe a checkbox is best for here. I'll look at how long have I been holding this investment, right? Maybe you don't feel like it's safe to hold so long. So you can look at, years, you can look at months. How much growth to date have I been appreciating, right? Appreciating. So I look at growth to date. What is the current value? So I can see, basically you're asking your question, do I need this, let's call it, what do you say, asset? Do I need this to be liquid? Do I need this money to be liquid, right? You might have something you want to spend on, right? Because everyone has emergency expenses, right? Do I need this money to be liquid, right? So you can look at current value.
I would say that, and this kind of goes a little bit out of investing, but as far as, when we're looking at our investments and deciding whether we're going to liquidate an investment, it's also important to remember that if you want to be a disciplined investor or an intelligent investor, depending on what you've decided when you first decided to invest in whatever the asset was, you want to make sure that you can try and stick to your plan. So one of the ways you can also do that is just by creating an emergency fund for yourself that you put into a little bit every month as though it was an investment in itself. This way, when you have, uh, your car breaks down and all of a sudden you have like a $2,000 bill out of nowhere, you're not, reaching right away to have to sell a good investment, maybe something that you've had medium term, but you plan to have it long term, 5 to 10 years or so.
I agree, and we'll touch on that actually in the budgeting part of today's conversation, because I'm going to train you and teach you how to budget and then use that budgeting, one of the categories, to put it towards investments. And of course, one category for emergency fund and one category for everything else. So that's definitely part of the plan today. So thank you for expressing that, Travis. I think that's really good.
Absolutely.
So awesome. So you can see that your step two. So basically, what you're doing here, and I just want to explain this, is that you generally have like 3 stages of investing. Maybe there's probably more, but like I'm just saying, like generally there's 3 stages, right? So the first stage is we go here and we say, okay, so actually let's type all this out, because I think this is useful even in terms of like just understanding. So stage one, do your research. Do your research. 100% stage one is do your research. So figure out what's investments what companies you admire and think will do well. Figure out which investment vehicles, right, or instruments. There's 2 ways of saying that. Or instruments will be your best bet. Let's call it that. It is betting, basically, right? And then you can use
Well, I disagree. I disagree.
Okay, please disagree with me. Go. Yeah.
I think that well, our investment styles are very different. So if you're looking at a cryptocurrency point of view, then definitely more of a bet. But if you're looking at low cost, low fee index funds, I don't know if there's as much of a gamble there. Over time, they've been proven to beat the market over time, or definitely to beat the average mutual fund.
I think that's right. So let's call it best options, right? It is your options. So I think that would be good. That would be good. That's a good in between. Because even within index funds, my opinion is that some will return more than others, right? So then it's
Oh,
still,
definitely.
again, you have to bet which
And
one's going to return
and
better.
investment is always a gamble. Of course, there's always the risk that you could lose your money. I don't want to um downplay that fact. I think that some investments are more secure than others, right?
Mm-hmm.
Bonds being some of the most secure, uh,
Yeah.
individual stocks kind of being depending on the stock, depending on the company, whether it's a large cap, a mid cap, or small cap, and if how long the company has existed, right? And what have their average rate of returns been on their stock price? Are they
Ooh, that's good.
dividend?
Sorry, that's one thing you just mentioned. So, date of incorporation or operation date,
Mhm.
start date, right? So that's really good information. You have the operation start date, you put that in, and then we can even have like a formula now that reads from that. Have a formula, years in operation, right? So we can calculate how many years in operation since the start dates. Can you Google Airbnb start dates? Or let's say Amazon's. Let's say Amazon start dates since Amazon is our main example here. When
You
did
got it.
Amazon start?
Are we looking at when the stock was first introduced to
No, I
the
want to see like how long has this company been in business?
oh, July 5th, 1994 is when it was founded.
July 5th, you said?
Hmm.
1994, right? So that's the operation start date. And now we can write a formula that I have already. So I'm going to copy it over. We can say the formula is, let's say, yeah, okay, here. I had a formula for birthday before, that's why I already have this, but I'm going to change this to operation start date. So this is years in operation. So plus years in operation. So we're going to format this as we mentioned. You have to add a format in your formula. So you have 26 years in operation for Amazon. So let's show that now. So we want to add the operation start date here. And then we can automatically, so let's add this here. So travel. So we have tags, we have operation, we have sites, anything that you want to track about these companies, you can really do really easily. And of course, over time, we're going to fill this out. But essentially, you can kind of see like, oh, let's call this a marketplace. So marketplace. So basically, you can see like, hey, this was the date that I started. And if I open up this information, you can see that they're 26 years in operation, whatever that information gives you. Like, you have to really understand like what to you is going to make sense that essentially will affect how you think about this business. Like maybe for you appreciate a long business. Maybe sometimes you want to cross-reference like, hey, how long have they been in business versus how much have they stock price appreciated, right? There's a lot of different things that you can cross-reference and cross kind of look at, and this is kind of like the way for you to design your own kind of categories what you care about. And of course there's standard categories that everyone cares about, right? So it kind of works like that. Awesome. So then you figured out which companies you admire, which investments or vehicles that you want to use. Then you want to go and say, hey, let's now make an investment. So your stage two is make an investment. So stage two, make your investment. So you want to choose the investments you want to make in your favorite companies and use the rules to use your rules to make a educated decision. So it's all about educated decisions, right? So you want to make your educated decision. For example, if we said we want to buy Amazon when under, let's just say under 2K, because that makes more sense here. Let's say you wanted to buy Amazon when under 2K, you did your data entry and you said, hey, right now it's 1.8 thousand. So I'm going to invest into it. How much am I going to invest? Well, I'm gonna invest $4,000, right? Where's it gonna come from? Wow, let's take a look. Oh, my savings account has 15K, so I'm gonna pull from my savings account into this Amazon stock investment purchase. So, so that's what you're gonna do. You're gonna make a educated decision. So that's data entry. So this is your making your investments, and then track your investments is stage 3. So then you want to say, hey, I'm gonna track my investments now. I'm gonna track your investments. So as an anxious investor, you're going to look up the current prices of the investments you're making from time to time. So you look at this view. So your current value is however much. Then you can observe the relevant properties to help you make a reasonable decision to buy or sell more. So this is like your cycle. This is always going to be your recurring cycle. Is that, hey, these are the companies I care about. This is the investments I'm going to make, and then I'm going to track how they're performing at relevant intervals I want to track them at. You can even set really interesting things where, let's say I make a new view of this, right? I only want to say anxious investor, but I only want to see, but only see when it's the right time. We probably have a better word for that view, but probably like periodically or whatever. Okay, let's call it periodic view. Okay, let's call this periodic view. Okay, so what I'm doing here, and maybe even Travis, you might find value in this, because we don't want to be looking at this like day and night. We should not be looking at this every single day. You're gonna go crazy if you're looking at this every single day. So what I recommend here is, I would say I'm gonna add a property for select. I'm gonna say frequency, okay? And let's just fill some out. Travis, you can help me out. I'll just open up any page in these investment portfolio. And you see at the bottom, there's like a frequency property. If you can add like weekly, daily, you know, all those kind of things, that'll be really helpful. So I'm going to start one daily. I'm going to say weekly, and then yeah, monthly, quarterly, and so on. And I'm going to go and pull over a very interesting competence. Yeah, I'm going to pull over a very interesting formula I already have.
You want me to add the tags here, right?
Yeah, just add tags for like monthly, quarterly, etc. Yeah. And then
am I in the correct place? I just want to double check. I'm doing it in this kind of Amazon tab here, but should I be outside in the entire?
No. In the Amazon tab, it's the same for everything. It's a select
data
property. Yeah, it's a database. So
learning so much. Okay.
We're gonna. So I just want daily, weekly, bi-weekly, monthly, quarterly, and semesterly. I'll just review frequency. So I want to say review every, and this is going to just give me that formula. And then I'm going to also add another. I'm going to explain this formula after I'm done, but I'm waiting for Travis to finish all that.
I'm putting them in, but
you gotta press enter.
Yeah, I'm pressing enter, and they're not. I'm going to create them. Like I put in monthly a couple times. I press create, and it says review frequency, and it's there.
Yeah, it's there. Yeah, cool. Next. Oh. Yeah. Okay. You're good.
I don't think I pressed enter the first time. Maybe I lied to you.
Awesome. I'm gonna add bi-weekly. Then I think we need semesterly. Are you doing quarterly right now?
I typed quarterly. I'm just gonna type year.
Did you do quarterly already? Yeah, I don't see it.
Yeah. Let's see what happens. I think that's what happened to me before. I typed it, but it didn't show up. I'm not sure if that's just an error on my end.
No worries. Okay, I'm done. I'll just add quarterly. Okay, awesome. So we have a few different options. So basically, if we say that we want to review this like on a quarterly basis, then every 90 days is going to calculate like how many days until we have to review again. So for example, let's say I want one of them to be daily, let's say, because this one I don't think we touched for a while. This one, because we edited it today, then it's going to be like that. But anyway, for example, we set daily, then it's going to track, hey, is it time to review yet? If not, then it won't show up. So what happens here is we have like a filter. Then we're going to add a filter. We're going to say we only want to see when review is over or equal to 0. So basically, only when it's time to review, it will show up. So as an anxious investor, you don't have to be so anxious. You only need to see it, that investment, only when it's time to look at it, whether it be on a daily, monthly, quarterly, weekly, whatever basis that you want.
Conrad,
Yeah.
why did we choose anxious investor?
What do you mean?
Just as a name.
Oh, I mean, you can use whatever name you want.
I think could we change it? Is that okay?
All good, all good. What do you want to call?
I prefer intelligent investor. Anxious investor makes me anxious.
All right, all right, all right.
I think talking about finance, financial literacy is already something that for most is going to be uncomfortable. And I know from my experience that when you grow up, sometimes too, when adults are talking about the finances, oh, it's grown folks stuff, but really they're anxious about it or they're not sure. I think that aiming or making a goal to be an intelligent investor, I believe is an intelligent investor is someone who's going to be able to sleep at night with their investments. So you're going to be able to come to your investment portfolio quarterly, monthly, weekly, whatever you decided, and you're going to make these decisions. And because you're so well informed, you will hopefully not feel as anxious.
Yeah, I think that's where I was trying to go at with that too, which I think you explained it very well, and I like your new naming. I think for me, like, that's again the intention is that I don't want you to be anxious. The whole idea is that we have a view for you so that you know that, hey, it's not time yet to review this investment, so you don't have to worry about it. Figure about it later, right? The whole idea is that the system is making it really easy. Again, you choose the stocks that you like, you make your investments into the stock that you want, and then you track it based on periods that you care about. Like, nothing more to that. And you can even add new properties and categories as needed to then understand the whole depth, let's call it that, the whole depth of how this investment is going to take place and where is it meaningful and all those kind of things. So that's the stage 2 of making investments and then tracking them. And then I'd say the stage 3 is, well, how do you cash out, right? How do you get realized gains and losses? So let's talk about that. Let's talk a bit about that. So let's talk about heading 2, let's make this a heading 2. I think that's how you do it. Yeah. Let's call this stage 3. Take profits, right? And ideally you take profits. Maybe it's not always going to be the case and you have to be okay with that. But ideally your stage 3 is take profits, or it could be losses as well. It just depends when you want to cut off your losses, right? But basically, if in the above stage you realize that it is time to sell some of your holdings so that you are taking profits or cutting losses, right? Let's call it cutting losses as well. Let's add it here. Enter in the below table. So we also here have like a default view. So I want to say what's happening here. Let's call this data entry as well, just so that it's similar to the above. So this is actually data entry. And what we're going to say is that, hey, for example, we wanted to cash out of Amazon. We did it on the 12th. And why did you do it? So you should ask yourself, why did you make this change? And again, these are just meaningful questions to ask you and remind you. I cashed out because I hit my threshold of 125% return. What's the change in portfolio? You withdrew $500 and then you choose a portfolio. Then what happens is that if I go into the visual view, so let's go into summary, let's call this monthly summary maybe, right? Let's say you do monthly changes, and this could be yearly, this could be like however period you want. I'm just using monthly as an example. So for example, you can say like, hey, this month I cashed out of Amazon, right? And I cashed out the position that I entered in on March 25th, 2020, right? And then I cashed out in $500. And what we want to do here actually is also give some feedback on like what price I cash out at. So let's also add that in. So let's say that I cashed out at $500, and we can add one more property that says what was the amount, like price per stock at time of sale, right? And then we can say, for example, let's say it was the price on the 12th. So can you double check for me Amazon's stock price on the 12th?
Yep. 1 second.
Sure. And of course, while Travis is doing that, I can show you what Patrick was doing. So Patrick basically has built a stock monitoring dashboard on Notion. There's some setting up, which is why I'm not going to go into too much in detail about it. Patrick has generously said that he's able to share this with our community. So if you want to, basically you can have like a table, or not a table, but embed right inside your Notion space, which will show all your favorite stocks that you choose and show
Share it
like
with me,
all the money. Sorry?
I said share it with me, please.
Oh yeah, it's at the bottom of this page, which will be released to all of our family members. You can duplicate everything that we're working on today. And you can see like essentially like the history, right? At certain times, what was the price? And I guess even for Amazon, I can even take a look right now. Let's say on the 12th. Oh, exactly on the 12th, there's no data. But yeah, sorry, what's the price?
1,760.33 and 33 cents.
1,763 and
60 and 33 cents.
This was 1 week ago.
That was 1 week ago.
Holy crap. Guys, if 1 week ago we followed this, it would have doubled. Are you serious? It's 3K right now, you're saying.
Which date? Let me double check. I'm looking at December 12th, 2019.
Oh, no, not December. Oh. September. I was like, there's no way in 1 week it doubled. That's crazy. You're scaring me.
No. Oh, let me fast forward, sir. Okay.
September 12th.
September. I was like, no, that's not accurate.
I was like, last week we could have just made that one purchase.
Oh, I can't see it either. I can only see okay. What? Come on. No, we're gonna zoom in. Give me a second. Sure. Give me it. I can only see. Oh, was September 12th not a trading day? Maybe.
Oh. So just go any day then. I mean, just tell me a date.
11th, 3,116 and 22 cents.
3,116. 23 cents. Awesome.
22. Yeah.
Okay, 22. He said.
Yes.
All right. Okay, so basically what happens is we had a change in portfolio of $500. We withdrew 500. Actually we can call it negative 500 because we withdrew. Actually it doesn't really matter because we'll do the math properly anyway. Yeah, it's a weekend. That's why. Didn't solve the mystery. Yeah.
It was a Saturday.
Yeah, all good. Okay, so yeah, basically price per stock was that. What we're going to do now is we're actually going to be rolling up. And I call this actually your portfolio is fine. We're rolling up the portfolio and we're actually going to be rolling up the initial amounts. So the initial value that you purchased it on. Okay, so value per share. Let's just make sure everything is named the same thing. So value per share at time of sell. And then right now what we're gonna see here is value per share at original purchase date, right? On sell date, on sale date. So basically whenever you exited your position, this is the difference. And then now what we can do, as I'm sure you're gonna be able to tell, we can calculate the growth. So what we're gonna do is, again, I'm just gonna copy and paste my formula so I can save time. We can say this is the growth. So let's add a formula that says, let's say current value. So instead of this, we're going to say this is the value on sale dates divided by the value on dates of purchase. So here we go. On original purchase date. And what we're missing here is, why is it like this? Prop value per share on that divided by this. It's not a number. Let me just double check my math here, make sure everything's right. So I'm gonna cut this, paste this. Let's say we do, let's do this again. So value on share at original purchase date on sale date. Yeah, these are the right numbers. Because this is not a number. Okay, so this is interesting. If you show original, it treats it as a text. You gotta sum it. For some whatever reason, you have to sum it to make it a number. Yeah, so that's what happened. Okay, so let's go back here. Let's copy and paste this formula. And then let's go into here. Let's throw it into this. And then we're gonna say, again, instead of the current value per share like that, we're gonna say current value per share on sale date. And then value per share on date of purchase is going to be here. It's like that. So basically we have that. We're going to make this into a percent. And actually, you know, so this is pretty great. You know, we can see that this is the growth, right? So we can say, hey, it's actually a difference of 165%. So if you want to see, like on this month, how did you do, right? You can show the growth. It's like, hey, you know, you made, you know, 165%, and you withdraw $500 for that, right? And basically these are the information that you kind of build for yourself and essentially see a lot of good stats. And if you wanted to, again, you can make this into like a text format. Oh, and by the way, Travis, your music is really low. If you wanted to put the background music, we can do a little bit higher. Yeah.
Okay, I was literally whispering over, like, can you hear that music?
No.
Okay, good.
Nothing.
All right, I'll raise it up. Let me know, okay?
Just a little bit, yeah. Awesome. So then we can say like, hey, you know, for example, if we have, let's say, for example, if the growth is over, let's say 1.5, so we made over, let's say even over 1.25, we made over 25%, we should say, you did really well. You know, your investments, you cashed out, and let's say plus change of portfolio at a earnings of, let's say 165%. So we can say this is the growth. We do a plus here. And then we say otherwise, we show instead of you did really well. So this is just like giving you like maybe a star, right? So you can like do really fun things to talk to yourself. Basically, your system can talk to you. That's basically what we're doing here, you know. And then what we're doing here is we're gonna add this. And then what we have to do, again, as I mentioned before, you have to format everything in brackets. And then you can format this in brackets. And then you can also do the same. So format. And then finally format at the end here. Awesome. So basically you can say, hey, you cashed out $500 at earnings of 1.65, and we can also like modify the formulas to kind of show us like the dollar signs and all that, but you know, that's for you to do. This is like a small thing. So like, let's say you add like $1, you cash out $500 at earnings of, you know, and you can change that to a percentage number instead. It's really up to you. So yeah, so that's a good example for you. Basically, you can have that conversational kind of return for yourself. So you can say, hey, I'm going to show the property for a conversational bot and you can say, hey, you did really well. So it kind of just explains like your purchasing decisions and your selling decisions. And I think, Travis, you want to talk about your essential questions?
Yeah, but let me actually touch on what you just were talking about with this realized gains and losses monthly summary. I think that whether you're investing long term or and you're doing maybe fundamental analysis or you're doing technical analysis and you're looking more at day trading or swing trading, to have this type of journaling, right? Of here's how I made my decisions. I mean, we could even enter in, here's how I was feeling when I made this decision. So
Oh,
that this way, we could start to really get a full picture of how we make financial decisions. If I wish I would have been doing this from the start so that I could really say, okay, well, maybe around this time of year, let's say Christmas time, I find myself selling more investments than maybe I'd want to. If I could see that pattern, I could plan ahead. But yeah, let me go to my essential questions.
go ahead.
So, when should I sell? We touched on that a little bit before. I think that's going to really go into what your strategy is. What did you plan, when you bought this investment? So, something like let's see here, what do we have, like our ETF, the Schwab S&P 500. You may be just putting $100 into that every month or every paycheck, let's say, and you may have a long-term, let's say a long-term strategy, right? Maybe you're going to hold it for 10 years. You may want to hold it for more than that, 20 years. I'm wondering, and maybe it's something that we can make, like if there's a reminder, right, that we could put or program in, like we're only going to sell this if, like, these are the conditions. Because I feel as though a lot of times, um, when we are anxious, especially when these big bills hit, or if there's something that we feel as though we need cash for now, it's very easy to forget about the strategy and the promises that we made to ourselves. Anytime we sell an asset, anytime we sell an investment that we didn't intend to sell, especially if we sell it for a loss because maybe we think we need the money now, we're robbing our future selves. We're robbing ourselves, um, you know, who want to enjoy retirement. And I think it's always important to remember that. Should I sell my asset for a loss? I think that ties into the same thing. There are certain bottoms and certain goals, like maybe, okay, if this stock goes down to this price, I'm going to sell, right? I know for riskier stocks, you're definitely going to want to have maybe a bottom so that if we see a drop in price, we know, okay, when we get here, we need to sell. And I'm going to skip real quick and say, if I sell for a loss, can I claim the loss on my taxes? I'm not a tax expert, but I'm pretty sure the answer is yes. But once again, check with your advisor. And I would say for stuff like this, it wouldn't hurt to check with, an accountant or someone who is a professional in this area who's going to be helping you file taxes. I know that I have been able to claim losses on mine before, but I don't want to get too far into that. I also know that if you sell for gains, if you sell out of a regular investment account, you're going to have a capital gains tax. However, if you sell out of something like an Roth IRA, you may not have to pay those capital gains taxes as long as you keep your gains within that account. And I think that's important to remember when we are talking about asset allocation, and diversifying our asset allocation within these different accounts that have different tax implications.
I think that's a really good point, and I have two very smart things I want to make about the system. The first thing is, your first point about having those rules, like I call them as rules to sell or buy at certain parameters. Those are kind of my goals. Like, so if you scroll up a bit, right? For example, we had a goal that said, hey, we want to just hit 130% return. We want to start selling, and when we ever get under 2,000 bucks, we want to start buying. Those are our rules. I call them that, like that we're going to use to essentially base our selling decisions and buying decisions on, and those should really not change. That should really be static. And once you set that, you should only change it only after you do a lot of significant research, because you got to stick true to your principles. At least in investing, I think principles matter a lot. And hopefully that answers that part of the question of like, hey, what are the goals I originally planned to achieve. The second thing that I have to make a really good point, a strong point, is that yes, 100% yes, the account that you make the investment with is so important. What we're going to do here, Travis, follow me. We're going to go to holdings, scroll down a bit, and I'm going to add additional notes, important keynotes. Okay. And
You
let's
got it.
say for tax-free savings account, obviously this is tax-free, right? For retirement accounts, cannot withdraw until, let's say, you're 85 usually, or you're like 60 plus. Like there's usually some.
Around the time, I'll double check that, but I want to say that's like the
Yeah, it
retirement.
depends on the specific account too, like a country, of course. Yeah.
Sometimes you need a minimum amount of years as well.
Yeah, but for example, we just have keynotes cannot withdraw since 65. I'll explain what this all means and why it's important. Savings accounts can withdraw freely, right? And then current accounts can withdraw freely, for example, okay? So why this is so important is because now when we have these keynotes, right? Let's say we go back to making the intelligent investment decisions. I'm now going to add one more roll up. I'm going to just duplicate this so we have a roll up, but we're going to change the roll up to roll up on, instead of investments, I want accounts, and I'm going to roll up on the keynotes. Okay, so right now what we can immediately see is that we can say account notes. So basically we can see like, hey, if we sell our bond ETF instead of our individual stock, it's gonna be tax free. And by the way, Travis, if you're lost, I'm back in the investment portfolio.
I was.
Okay, so right now investment portfolio, if you switch to view for intelligent investor all and stage
Okay.
2, yeah, basically you can go to the right and you can see that now we have account notes that kind of explain like, hey, on top of having like gains and losses and your rules, you can also look at, hey, for this specific account that I made the investment in, can I even withdraw this freely, right? Like let's say for example it was an investment in your retirement fund. Like if you can't withdraw freely, then maybe you're not going to cash out, quote unquote, cash out of that stock as much as you might if you wanted to spend that money. Maybe you're saving up for a house, maybe you're saving up for a specific purchase, right? And if it was in your savings accounts or your other accounts, maybe it's a different story. So now you're already making your system a lot smarter, right? In one view, you now know so much information that can help you make your selling or buying decision. Travis, does that help for that account notes?
Absolutely. It's so important to have systems, like we say, in place to help you make these decisions. Because usually, when we're making these important decisions, we're either anxious to sell because we think we're going to maybe make a lot of money or get a lot of gain, or we may be anxious because there's something emotional happening. We need this money for something and we really need it now. We may need the reminder from ourselves, from our investment portfolio bot that says, hey, not today, not this one, maybe find another way.
100%.
Or hey, you've hit what your goal was for potential gains here. It's a good time to sell.
Exactly. And I think that's the true value of what we're building here, is that on one view, you can see so much information that you need to see based on like all the different, let's say, different spokes to the wheel, right? That controls this specific decision. And I think, there's just no better way to explain this other than saying like, hey, this is extremely the value that we're looking for here. And so I guess one more thing, so I'm going to add this here, is that, what are the unique quirks, right? We call them the quirks of the accounts that I chose to make the investment with, right? And then that's where you can kind of explain to yourself, the account notes. Awesome.
I would say one of the biggest factors as well,
Mm-hmm.
when we're talking about these accounts, it's going to be the fees. Each bank has a different way to, charge you for the different uh what do we say, like there's the different accounts, right, for the different services that they offer. So some banks are going to charge you ATM fees. I know Charles Schwab Bank, you pay your ATM fee at any ATM and they reimburse you for it. And that was something that I really valued when I was looking at banks. Some banks may have zero fee checking accounts or zero fee investing accounts. You also want to look at the um, the interest rate, right? For just a plain checkings or savings account. I would say that you want to try to avoid having your money sit in an account that has an extremely low interest rate, and you want to try and find accounts that are going to let your money grow even if it's just sitting there, right? That's the idea that Warren Buffett talks about, letting your money work for you, letting your money work while you sleep.
Yeah, so adding on to that, I just added a new category called potential fees. So basically now you know, like, hey, for this one, is there any trading fees when I withdraw, when I make a trade? Is there any withdrawal fees, right? So I just added that as a new roll up in, again, the stage 2 make your investment. So again, you can just see every time we add new ideas, we're just adding more value to the system, and it's very, very seamless. It's very, very easy to just keep on doing that as you so wish, because like really the sky's the limit in terms of what you want to track. I think that's the beauty of what we're doing here in Notion, is that, hey, I decide that I have this new thing that matters to me, that when I make my sell or buy decision, I need to know XYZ. I need to know I can withdraw freely. I need to know any potential fees, right? It's really, really easy for you to start adding that information, like that's tagged to the same data, right? The same row of information that is relevant for example, the fees are only relevant for this account, and the notes are only relevant for this account. And for example, our rules are only relevant to this stock. These are all certain information that ends up getting compiled into this one database called investment portfolio that helps you make a intelligent investment decision. Is there anything else we want to talk about this specific piece before we move into connecting this to like budgeting and all that?
I know. I mean, this is awesome. Probably the only other thing would be, with this tool, you can do what we're doing now, is almost do theoreticals, right? If I had this in this account and it was worth this much and that much, you know, here would be my hypothetical gain or loss. I just really love this tool. I don't have any much more to say about it. So let's keep going.
Awesome. So I'm going to just clean this up a little bit. I'm tracking unrealized gains. Losses. I'm just moving this stuff up. This is just teaching people things. So 2 ways of tracking returns. Let's make this into a toggle list. There's 2 ways of tracking returns here. This is super useful. Okay, so now we're going to talk about one of the most biggest pieces. So what we did here, let's just quickly check off. We cleaned up formulas, we added some meaningful views. We didn't really beautify this page yet. I think that might be something we do at another time, probably off camera, but definitely, things that we can just drag around and clean it up just to make it presentable. But let's connect this to our budget tracker and finance tracker. So this provides us opportunities to connect also to daily habits, success plan, etc. So that's also very important. So one thing that I wanted to show was here, and I showed this in our last stream too, but I just wanted to recap, right now, if you define your budgeting categories in your finance tracker, you can actually start rewarding yourself in a gamified way whenever you save money, whenever you feel like you save money inside your daily quests. So how does that work? And I'm going to switch to my other tabs just to show you about all those information. But for example, I'm in my finance tracker, right? And let's say I have 4 budget categories. I have entertainment, I have debt, I have travel, I have investments. And I think for Travis's sake, we're also going to have an emergency fund. Yeah. Let's also add an emergency fund. So we have an emergency fund here, and emergency fund, we can make like an SOS maybe. Let's call this an SOS. And then actually let me throw you the link, Travis, so you can follow along, because you can't see my screen unlike the viewers we have, but that's the view there, and then this is the second view to share with you. So these are the 2 pages I'm on right now.
All right, I'm bringing them up now.
Awesome. So in under budget categories, we can even add one more property that says like, hey, target number. Let's make this target number or target dollar, right? And then we can have a formula here, or let's make this a number, right? A dollar. So let's say our target number for emergency fund is, what's your target number, Travis, for your emergency fund? What is a good number, a meaningful number for your emergency fund?
$3,000.
$3,000 for emergencies. Okay.
Yeah.
For investments, how much would you like to have in investments?
Investments, as far as, we're talking about the finance tracker or the budgeting? Like, how much am I going to invest on a?
How much do you want to save up for investments to put towards an investment fund?
Infinity money, Conrad. I mean,
Infinity,
no.
but like, I mean, like, okay, let's say 100K. Let's say 100K. Everybody.
Let's say 100K.
All right. For traveling, how much would you say you want to put for traveling?
For traveling,
Not right now,
I
but
think maybe like 2,000 to 5,000, depending on where I want to go. Not right now, right?
yeah,
Right.
let's say
So
5K.
we can save up, right? Because we're gonna take a huge trip to Singapore once travel.
Yeah, I'm excited, man. All right. For debts, let's say this one's like maybe you have student debts, right? So I'll just put 25K. General student debts, around there is pretty low actually, but just an example.
Can I actually can we raise that?
Sorry.
I feel like the average student debt in the U.S. is actually pretty high. I would go maybe
80K.
anywhere from
Yeah.
like 80 to 100 even. Some people have a lot, and I think it's important to know that it is possible to get out of it. It takes time, it takes discipline, but it is possible to eradicate that debt using
Sure.
different methods.
Agreed. So we have debts, and then we also have entertainment. Maybe you want to buy that new video game. So this is super small, maybe $500. Okay, so we have that target dollar value, and then now what we can do is we can add a formula that basically says, how much spending or how close are we, right? And basically, this is just going to calculate the target number minus the remaining balance. Other way around, sorry. Remaining balance minus target number. And then we're going to make this $8. And you're going to see something really interesting because this is negative. Anyway, this is because we actually haven't saved money into it. But so let's just make that example. Let's say on one day we actually saved money into our debts. So let's say we saved money, and let's say we just saved, just an example, we've saved 5K, let's say, which is unrealistic, but I just wanted to put that just so that these numbers make more sense. Basically, if I saved 5K, actually, am I in the right place? I am. Okay, 5K. Yeah, so automatically updates.
Are you in the debts view?
No, I'm in the budget categories. So just a bit below.
Okay.
Basically, right now, automatically updates that, hey, to date, I've saved 5K, right? So you see that automatically updates. And of course, if it was like incremental every day, like I saved $50 today, I saved $100 today, I saved whatever, basically every time you save money, we're actually keeping track of that. You get a certain percentage, you move up in your day, you get gold rewards, you get experience rewards. Basically, it's something good for you to save money, right? And you can save it towards whatever category you want. And what we just did was that I just demonstrated that you can save towards debt, you can see your remaining balance, and you can even spend your debts. So now when you go into your finance tracking, you can see that we have example. Let's say, for example, you made a December, mortgage payments on your house or a school debt payments, and then you pay towards whatever organization, and then you can basically track like, hey, it draws down from the budget of debt. But what I really wanted to show now is, on top of being able to spend it in this way, we're also going to add one more category, and I'm going to explain what that is. So what we're going to do here is we're going to say, hey, this is all well and fine, but we actually have one place where we're going to be essentially tracking all the holdings of our accounts, right? We mentioned that down here in the original investments and financial literacy library, where we say, hey, these are our holdings, these are our accounts. But we want to also keep track of the amounts in these accounts. We want to keep track of when did we throw in money, right? When did we take out money? So how I usually like to think about this, and Travis, this is just my personal practice, so maybe this is where you, as well as the community who's now watching, can also share where they kind of see this happening in their lives. But for me, like, I like to place my investment accounts as separate accounts. Like, I don't like to think of them as like my current accounts or my savings accounts that I use on a day-to-day basis. Or not savings, but my current accounts that I use on a day-to-day basis. So for me, like, whenever I put money into my, so I'm just gonna move these tabs over, but whenever I put money into my investments, my investment accounts, I actually treat that as like a spend. So for example, I'm
Yeah,
spending,
me too. Absolutely.
yeah, so I'm putting like a deposit into, let's say call it my, which one? My retirement account, let's say.
Yeah.
But usually that's
I
that's automatic. Sorry, that's
always,
automatic. Yeah, into my
that's all right.
tax-free
I always
savings
make it a point
account.
to pay myself first.
Sorry.
Oh, sorry, I'm interrupting. I said I always make it a point to pay myself first. I feel like I've read that somewhere. You try to you have to discipline yourself to invest in your investment accounts first. So we're looking at all of this budgeting category stuff, and maybe one of the first things we do is go out to dinner or something when we get paid. But I think before then, you want to be able to set up, maybe even if it's an automated investment, if I get paid on the first of every month, that even if it's $10 to $100, and this investing account just gets pulled as though it's an auto bill, right? As the same as your credit card or your electric bill may get pulled monthly, you want to have that there and budget it out how we're doing here, so that you don't have to think about actively, oh, every month I need to save. Nope, it just gets taken out. I found that that's the best, because then you almost forget about it in a good way, right? So then, like you said, you're not looking at your investment accounts like they're your checkings accounts, like you're kind of your day-to-day in and out. And so then you'll go back and look and say, oh, I've saved quite a bit here, because you've been paying yourself first as though it's an expense.
100%. So if you can change to like the monthly spending view for, let's say, December 2019 to under finance management in the finance tracker page, basically what I just did is I'm adding one row for deposit into the tax-free savings account. It's the debit, it's a spend, right? Or you can even make it an investment if you want. Maybe let's add one more, let's call it, but spend is usually right, you are spending it. The organization is, maybe it's your bank, right? Whatever. And then
Yeah.
let's say you put in, let's say 3K. And this is where it's going to be interesting. So what we haven't done yet is we haven't shown how does the budget category get 3K. So let's say, over the course of 1 week, or not 1 week, over the course of like 3 months, let's say you've saved money into your tracker, into your daily quest, and you're saving it towards your investments. So you've designated that. So let's say you save money towards investment. Again, for simplicity's sake, I'm going to actually just make this like one day that you saved it all in one go. But obviously you can see that you can add it as days go on. Let's say you saved 3K for investments on the 18th, right? Again, not realistic, but as an example. Now you can see that in your investments, you have 3K that you saved to date, and your balance is 3K in your budget. So what you can do is you can now, because when you save, right, we're not actually moving the money anywhere. We're only keeping track of it in this table. You haven't moved it yet. What I'm teaching you now is you're actually moving the money. So when you deposit it into your tax-free savings account, you're actually moving 3K, right? Or let's make this a bit smaller, just for example's sake. You're moving 22.5K, and then this is a spend in December. That's fine. You're drawing down from your budget. You're drawing down from your investments, right? And then now we're going to add one more relational category. So this is really interesting. You're going to add one more relation. We're going to call this to the holdings. So let's call this holdings. So, ooh, this is across databases. Interesting. Okay, 1 second. I got to make the relation smarter. So I'm going to I'm going to move this for a second, and I'm just doing some magic. I'll explain it later. But basically, I just gotta move that database over for a second so I can do the relation properly. So I'm gonna do a relation to holdings. So relation, I'll make it holdings. Awesome. So I can now tag that. I'm going to go back to this and move it back into this page. Just give me a quick second. How are you doing, Travis? You understand what I'm doing?
Conrad, I just wait for you to explain the magic later in the meeting. But I do understand what you're doing from a budgeting standpoint, from a categorizing the standpoint.
From
Yeah.
an
As
accounting
far as the
standpoint, yeah, I think the accounting.
programming, yeah, that's it's above my head a little bit, but I am keeping up. The one thing I really love about this is for anyone who's just beginning Notion, there's a slight to moderate learning curve. And when you're researching your templates, if you're a person like me who likes to count, track everything, you have to take your time because there's so much to learn. So what I find is that you're going very fast, and maybe if I wasn't in here with you and also kind of having the meetings before it, I wouldn't necessarily know to slow it down and to say, okay, wait. But you give me some good advice, which is, Travis, don't try to do it all in one sitting. That is impossible. So even if you took a day, and one day you only do finance management and you really focus on that, and then the next you do the budgeting, or you're looking at the investment tracker, and you may only focus on researching one investment. And I think that that's really okay, because once you enter in this information, it's there. So as far as the magic that happens behind, i'm definitely still learning, as I told you before, but I really like being able to kind of watch this process, and I'm in my own Notion, like taking notes as well, like, oh, I need to do this, so I gotta enter that in as well.
Yeah, awesome. So thanks for that. And I think you're right. Like, there's definitely things I'm going a bit fast. So that's why I like you guys to ask me questions if there is something I go too fast. But again, at the end of the day, everything I do here is duplicatable by our lovely community members. Like, I'm only building for the sake of, collaboration and, increased competencies between all of us, right? Increased knowledge. How can we be better? How can we do better? So for this example, now we have like an investments category or property. So we can say, hey, this investment is going towards our TFSA, which again, I need to move this because it's okay. So what's happening is I actually have these two databases in different workspaces, which is why it's being a bit, it's not being so friendly to me. But I can fix this really easily. And how I do that is basically, let me show you a cool hack. So I just copied the link of this, and I'm going to my holdings here, and I'm going to just make a quick view here. So I'm going to paste this, create link database, and Travis, I'm back into the investments and financial literacy if you're curious. And basically, I'm just going to hide a lot of stuff here just so I can have like a very detailed look. I want to get the let's actually see if there's already a view I can steal. No, I gotta build this view myself. No, actually I can steal a view from here. Sorry, I'm just gonna steal a view, and this is against teaching you guys how you can easily build views. So I'm gonna delete this view for a second, but I can show you how you can easily steal views from another place. I'm going to my dailies, one of the dashboards we have inside our templates, and we have a view here already at the bottom of this page. Exactly, which already has like a lot of the stuff I need. So I'm just gonna copy, I'm not copy link, sorry, I'm just gonna click on that and then Control C or Command C on your Mac. And then you can Command V, Control C. So then it has the exact same view. So I can just save my time. And I don't care about daily inputs or whatever. Right now, what I'm looking for is actually just investments. I'm gonna add a filter. I want type is investments, or I'll type the type tags is investment. So just as an example, so we see here, this is investment view. So, and let's delete everything else for now so we're not confused. So we have this where we say, hey, we deposit into our tax-free savings account. And now we want to have a property that says this is investments and this is drawdown from budget. So this is going towards the investments of our tax-free savings account, as we mentioned. And then it's drawing down from the budget of investments. So we can see immediately, if we ever go back to Finance Tracker, you can see immediately that we have drawn down our budget of 3K. We drawn down 2.5, and now there's only 500 remaining in that budget. Again, it's just accounting.
Can I ask you a question, Conrad, about the drawdown?
Yes.
When we're entering that in, so when I go into my own personal like finance management tab, I can just what do I just slash like link to a page, and I'll link to my investments page, and it will just be able to pull from my investments, or if it was like in my budgets, I would be able to just essentially do that. Like I see it says a drawdown from budget. Is that like that's like a formula you put in as we were doing this? Because I can't necessarily see when you do that.
Yeah, it's a formula that we just added in. Well, I mean, the formula for drawdown has always been there, but I just added the category. And so, for example, again, you can watch the stream after, I guess, to see what I'm showing on my screen. But basically, like, what's happening is whenever I said I'm spending money here, and I'm actually taking it from a relation called investments and putting it towards a relation for the actual accounts I'm depositing in, what happens is we have behind the scenes formulas and rollups that's showing that, hey, we spent 2.5 and therefore our remaining balance is 500. And then on the other side of this database here, on the investments and financial literacy page, we're now showing that, hey, in our tax-free savings account, so let's make this, we have a incoming deposit, right? And actually, let's just make it, we can also have withdrawals, but that's getting more complex for today. But basically what we can do is we can add now a roll up here. We can roll up and say, hey, this deposits into tax-free savings account, right? So has how much was deposited, the amount. So we can sum. So basically we can say, hey, now we know that for certain we had deposits and withdrawals of this amount, deposits / withdrawals. Okay, so starting amount is always important because you're never going to start from scratch from us. Like you're never going to start from zero. You always already have investments, I'm pretty sure, but then you can make that zero. So this is easy for you to migrate any information over. And then your liquid becomes, well, minus this, but you're also then adding your deposits and withdrawals. So deposits and withdrawals. So now what we have is a total number of liquid assets in this account is actually 60K plus 2.5 minus whatever you spend, which is the investments amount. So to make things clearer, I can add that at the end of this database over there. Yeah. So basically our liquid amounts right now is 61,000, and you can see that immediately. You can see how many with deposits and withdrawals. Maybe you don't even need to show this here, but instead you just show deposits and withdrawals here. Oh, no, I just showed the same thing. But what I'm saying is that I'm showing only the roll up. So that's over here. So Travis, if you're still following me, basically now we have we have in the holdings tab, we have our starting amounts for all our accounts. We have potential deposits and withdrawals, which we track through the finance tracker, which we then are able to supplement with a budget, the budget tracker, which also connects to our daily quests, right? So, and then we have our total investment amounts, and then our liquid, and etc., etc. Let me show you one thing, guys, because I have a very good diagram which actually explains all of this really seamlessly. So let me pull up my whimsical board here, because I have a really good diagram that shows exactly what I'm talking about, so you don't have to kind of guess. Like there's a bit of a confusion, I'm sure. So Let's bring it up, and I'm gonna paste it in this document so everyone can see as well. So definitely it's gonna be very, very easy. Let's take a look. We're inside my boards, I believe. Let's see, where did I put it? Okay, so here we go. I'm going to copy and paste this. It's already in my downloads folder, so I'm just going to pull up my downloads and hopefully I can find it instantly. Okay, I can't. I'm just gonna screenshot it and then paste it in here quickly for you guys so you guys don't have to worry about what I'm showing. Okay, can you see this, Travis? I'm gonna paste it right above everything. Let's go above, let's start investing. Let's go above that. So,
Okay.
right here. Can you see this?
Yep. I can see it.
Awesome. So basically the whole cycle, as I see it, and maybe I'll add another arrow to go back upwards. But basically you start budgeting, you do your portfolio management, and then you earn returns on your investments, right? And then you go back and then you start budgeting, you do your portfolio management, you look at your returns on investment, and then you go back. How we supplement all of this is in your daily quests, we incentivize you to budget. Every time you budget, whether it be towards investments, towards your debts, towards your entertainment, towards traveling, you earn experience points and gold. It's something that is beneficial to you, right? So we want to make sure that you're highly motivated to do it. Next, you do your portfolio management. Portfolio management involves a lot of research. So your research categories, your residence calendar or knowledge hub, whatever you want to call it, is going to be very, very critical to helping you understand more about your portfolio and also improving your portfolio, right? Where do you find relevant information to add on and, research about the stocks that you care about and the investments you care about. And then finally, when you maintain your returns on investments, you can basically cross correlate with your success plan. Let's say you had a success plan, you had a goal of, becoming financially independent, and how you notice if you're financially independent or not is to see if you can get, an ROI of, let's say, $3,000 a month, right? Something like that. So those are the interesting things that you can see. And this is how everything connects. Travis, you have any questions about that?
No, I actually really understand. And I love how you made the connection to the daily quest, because that was something I was wondering earlier. And I get how this is going to work, especially with the relations that you were just telling me about.
Awesome. So that's the gist of it. And I think, one additional thing someone was asking us about. So there's a few things that Julian was interested for us to show. And I just want to make sure that I have shown that. Total principal invested, total realized gain losses, total unrealized gain losses, total return. And so those are interesting things. So these are things that can be cleaned up really quickly. So let's go down. I already showed you the total growth, right? Total current value, total unrealized gains. We're missing right now the total realized gains. So let's add that. So let's say we have again, a monthly summary. So let's just add let's say realized gains of how would we do that actually? I'm thinking, because we withdrew the 500, but they're not all gains, right? Like part of that is
from the account.
Yeah, part of that is principal. That's interesting, actually. I don't know what you want to see. Let's say that, because it depends what you want to see too, right? You cash out that earnings of 1.65. Like maybe you can say like, hey, maybe, out of that you divide it, right? And you say, oh, only, whatever the earnings was of that, you can say those are your realized gains. You could definitely do that. Okay. Yeah, let's add that. Let's add one more formula. I think that would be interesting. Okay, so let's switch to the monthly summary view and then look at cashing out of Amazon. And what we're going to do is let's add a new formula here that is sharing that, hey, I cashed out $500, but because I know that the growth is 165, actually that means I made a profit of however much, right? let's think about how that math will work. I think it's as simple as just dividing it, right? So 500 divided by change in portfolio divided by growth. I'm not sure that's exactly right. Yeah, that's right, actually. 300 ducks. Yeah. Am I right, Travis? If I'm saying the realized gain loss. And of course, you guys can let me know in the chat if that's right as well. I just want to double check.
I can't see what you're doing. All I see is cashing out Amazon for
Can
realized
you
gains
open
and
it up?
losses.
Yeah.
Okay.
And then I have a new property called realized gain and losses, showing 300 bucks.
Yeah.
That is right, yeah? Because my original amount was going to be 200 something, and then if I grew 165 and I cashed out 500, then 300 is my earnings. Yeah, all right. So then monthly summary, then we show that these are earnings of realized gain losses. So I'm going to show that. And then of course, then we can have a calculate at the end. We can sum it all up and we can say, hey, on this month, this is how much money we earned from all our investments that we actually realized our gains and losses. So yeah, that's a really interesting way to do it. And that's it. I know someone was asking about APY as well. APY is interesting to calculate. That one is not too tough, but basically all you have to do is just also track like every year, like on the 1st of, let's say, January or the 31st of December. It's up to you, whichever one you want to do. Like, what is the current price at that moment? And then you can track your APY. And then you can kind of like graph out almost like what your expected return might be in the future. Is that something that you would do, Travis? Is that something that's useful to you?
Absolutely, yeah.
Okay. So do you want to try doing that for Amazon? Let's try showing that for Amazon. So I want to. You can go back to your investment. Actually, let's do that in the. Oh, this is smarter. Okay, let's do that inside the company stock to watch. Okay, and then let's open Amazon. And then, so in stage 1, okay. And then I want to put a new property called price at 2019 fiscal financial year, right? Price per share, value per share. Okay, can you find me the December 31st, 2019 price? And then we're gonna say value per share at 2018 as well. And let's make this a dollar value. And this is also a dollar value.
I also want to correct myself from earlier. I always like to make sure that when I'm saying things, they're not maybe misinformation that I may have heard. I'm getting some mixed information about the average student debt in the U.S. I'm seeing some numbers from 2018 saying about an average of 3,200 for a private nonprofit college, or to like about 40,000. I'm sorry, 3,200, 32,000, I should say. To about 40,000 average, about 88% of graduates. This is of May 2018 for for-profit colleges. But it seems like some of these numbers and articles are varying. So I wouldn't be surprised if maybe I happened to read something that was grossly overstated or had a very specific set of conditions.
Got it. Okay.
Looking up Amazon right now.
That's fair. Yeah, you can do 2019, I'll do 2018, and then yeah, I think that would be a good way to start. And I guess no, actually, can you look up both? I need to do the formula. Yeah, I need to do.
So we're looking up. What's the date? December 12th.
December 31st. Like we're looking for annual, so the end of the fiscal year every year. So December 31st, 2019, and December 31st, 2018, or whichever, as closest as you can get to that, because it might be a weekend.
You got it. So December 31st, 2019, that's going to be 1,847 and 84 cents.
Okay, 1,847.84. Okay. And then the 2018 one.
2018. So I have about, this is December 29th, $1,169.47. Oh wait, wait. We said the 2017? No, that's 2018. I apologize.
I
These
mean, was that
graphs get
27 you just gave me?
That was 2017 I just gave you.
Perfect. Give me 2018 now as well. It's more.
Okay.
It's more data.
2018. Sorry, the more you the wider the year range, the harder it is to narrow down. Here we go. So this is December 28th, 2018. $1,478.02.
Sorry, you have to repeat that to me because I'm working on something else. Go ahead.
$1,478.02.
And 2 cents. Okay, cool. So if you can flip back to our Notion page, you can kind of see where we're at now. So we have essentially, we have 2017, 2018, 2019. And we can show the dollar value. And basically we can see the growth, right? So if we want to say APY, let's say average APY, right? We can do, let's just do 2018 to 2019 as the example, but you can definitely average out even across everything. We can say divided by 2019, and we can make this 8%. Wrong way. I think that's right? The math. I just want to double check with you. 2019 divided by 2018, so 125%. And then we can also go back to the growth formula here and just copy this little bit of code. That's really helpful. So we map everything out in a round, and then we divide by 100. So that would round it by 2 decimal places. So what we're doing here is we're going to this. We add a round to everything, and then we multiply by that. So now it's 2 decimal places or 0 decimal places. So it's 125% for the last year. That's wrong, not 125%, but 25%, right? Yeah, so 25% growth. 125 is 25% growth. Yeah, we're right. So yeah, that's how you can get the average APY. And if you wanted to, you can basically even take it. So as an intelligent investor, for example, right? You can now have a roll up here that can say, hey, what's the average APY? Right, so you can see how much you're beating the average by, which as an intelligent investor, you'd be very keen on. So if you do this, you can say on average APY on your investments, you want to see the average APY. We're going to show the original, or let's just say sum for now, just so we get the math number. And you can see the average APY is 25%. So you're beating the average by 57, right? So you're beating the average by 32%, I believe. Yeah. So yeah, so basically those are even more informations that you can figure out and you can compare and contrast to. Yeah. Any other things? I think we've done a really good job for this one. This is like definitely already a 2-hour stream, and I think we're going to cut it here. Yeah. If nobody else has any questions, I think this is where we're going to end off. Like this is basically the whole system.
Page later, right?
Sorry?
I said I think we just have to kind of, beautify this page, but this is when we first started on this venture, I would not have imagined how much just good information and good just I don't know how comprehensive this system really is. So it's 100%. Great.
So yeah, so what we're going to do from here, and this is obviously off stream, but we're going to be cleaning up the database, we're beautifying it, making sure that it's available for all our community members to download and duplicate, and of course making sure that everyone understands the system. So I'm just going to reiterate, there's only 3 stages to invest. Do your research, right? Find out what company stocks you care about, make your investments into the portfolio that you care about, track your investments using rules and systems and information to guide your buying and selling decisions, take profits, cut losses, and then of course, make sure your holdings are healthy by ensuring that you're always budgeting, right? So budgeting, and you're incentivized through daily quests through our gamification platform. You are doing portfolio management, so you're doing a lot of research. And then finally, you're getting your returns on investments, which then links to your success plan in terms of your objectives and key results. So thanks guys, really appreciate your time to watch us. I think this is a really fun stream. Thank you, Travis, for joining me today and joining me last week as well to explain this all to our wonderful community. If you guys want to learn more about this stuff and other cool things that we're working on in the community, please feel free to join us at code-x3.com. And essentially, we do a lot of fun, cool builds like this where we just innovate on new ways to tackle everyday challenges. Anything that you want to say, closing words, Travis?
Thanks for having me. Thank you for teaching me. Thank you for the community. Like you said, 76 countries. I know for a fact what I've talked to people from probably at least 10 of those countries, and am working with them actively. So I just love this community. I love that I'm learning new things and learning how other people think every day.
Awesome. Well, that's that then. Thank you all for joining us, and you guys have a rest of a wonderful night if you're in North America, and if you're in Asia like me, have a wonderful rest of your weekend. Please take care, guys. Bye bye.